Well, hi folks. This is the first broadcast that I'm sending out as a married man, so congratulations are in order. Thank you very much for all your good wishes and for everything that you've sent me here on Twitter, which has been fantastic. But now back to business. Let's have a look at what's going on in natural gas. And I've got two charts up here. I actually deleted all the horizontal support and resistance lines off my day chart on the Henry Hub natural gas chart, the NYMEX chart, but it's actually quite good to look at it cleanly without all the lines and so on, and we can just start afresh. So let's do that while we're here, and I'll give you a sort of a quick view into how I'd go about a chart analysis with a naked chart. This one's not completely naked because we've got the 20 period, the 50 period, that's the green, and the red, 20, 50, and the 200 period moving coming down just at the top here, around about $3.50. But what I can see straight away is we can put a sort of a trend line underneath here. So let's do that and just draw an upward sloping trend line in there. And you can cut off the wicks a little bit if you want to, that's okay. The wicks are not that important really. You want to get the sort of most touches, and the body of these candles is really the most important. But there you go. See, I've got 3 touches, 1, 2, 3, actually 4 touches on this trend line. The trend line's just slightly below the 50 period moving average. So that's acting as a support. And what I'd normally do then is see if there's a parallel to that trend line and just clone this one and see if we can get a channel, a parallel line, and we can. So there's the top part. Now you can see we're in a rising channel. Now, after a big move down like we've had recently, over the last year or two, this is actually not a particularly good sign. We don't want to see a rising channel. Actually, we'd prefer to see a falling channel. A lot of people think this is a bullish channel. It's actually not. It's a slightly bearish channel, more like a sort of a bear flag or something like that. But it is quite long and extended. And overall, our view on natural gas is that we expect this market to be eventually bullish, aiming up towards this 200 period moving average. So what does that leave us with? Well, we could also draw a couple of support lines in here using a Fibonacci analysis. I like to keep my chart super simple, so I'm just going to draw that fib in there, just zoom in a little bit. So I've drawn the fib from this low at just below $2 up to about $3. Actually, we could put the fib a little higher if we wanted to, but we're looking at this most recent move up from the bottom. But if you wanted to, you could also make this Fibonacci in alignment with that $3 high if you wanted to. So then we're drawing it from this low to that high. So you could draw it either way. And if anything, I'd prefer just to use the longer term fib. So let's leave that one in there. And what you can see is that we've got this retracement level, this pink zone. The 50% Fibonacci is where this support, previous support was, a swing low. This is a day chart, remember, and it also coincides with this rising trend line. If this trend line is to hold and the 50 period moving average is to hold, then we should actually find support around about here, somewhere above the $2.50 sort of level. We're at $2.54 now. We've got a procession of lower highs on the daily chart, and this is moving downwards, as you can see, just about a perfect procession of lower highs. But let's count how many there are. So we've got 1 day, 2 days, 3 days, 4 days, 5, 6, 7, 8. This is day number 9 today. So remember that these series often move in 7s and 9s and 13s. So we've got a 9 count. Often you'll hear people speaking about a 9 count, and it is significant. It's not something that you can rely upon by any means, but it is a 9 count. So even though there are a couple of white candles in that 9 count, it's a 9-part series of lower lows really in general. Not perfect, but generally moving lower, and no higher highs, apart from that one bearish candle, slightly higher than the previous white candle's day before that. But in general, we've got a 9 count. We're at the 50 period moving average. And this line here at $2.50 is obviously a significant support line, not just because it's the 50% fib, but also because you can see the price has stopped there on multiple occasions. They're just spiking through it. They're reaching up to it and falling down. They're reaching up and falling down. We're coming back down to that level now, just at about where the 50 period moving average is. And then we've got this longer term, now channel bottom. It's a trend line, but it's also part of a channel. You can see that there is a parallel channel above it. So that's actually a parallel channel rather than just a trend line by itself. I like to draw channels as often as I can because prices trade within channels very frequently. And if you're trading in a range, you could sell at the top of the channel, buy at the bottom, that sort of thing. And that's kind of what we want to do, and what we have been doing is trying to buy at the bottom of these channels. So we bought at, if you remember, we bought at $2, then we bought at about $2.10. then at about 2.15, and we've got out of those trades repeatedly at the highs, but we've still got this one from $2.51, the last one that we got in. We didn't reach the bottom of this channel. At some stage, however, we'll expect a channel failure if we're going to move higher, which I think is actually the way we're going to move. Doesn't mean immediately, but overall, the direction is probably bullish. I'm saying that, but also allowing for a retest, and I'm going to put up a picture of this tweet that I just sent out. Let's do that now. So I'm just loading up my Twitter channel. If you're interested in what I'm thinking about throughout the day, go across, well, it's not Twitter anymore, it's X, keep on forgetting, but you can go across to this X channel and see my thoughts. And I've got today, for example, thoughts on AMD and stocks and Swiss franc, Japanese yen, the NASDAQ. Interesting thing here with the Fitch rating downgrading from AAA to AA plus for the US and how that might affect the overall markets. There's also some stuff on crude oil and what that might mean for the Biden administration and for inflation and interest rates going forward. But what I did was I put up this chart over here, which just shows a comparison between 2002 and 2023. The red line is the 2023 where we are at the moment, and the black candles are the 2002 movements. You can see over that period, these charts were incredibly similar. So we had a bit of a rise, then a dip, and then a rise, and then dip. You can see the red line goes up and then makes a dip. Same with the candles. Then we have a sort of a top formation there. This year it was a double top on that occasion. In 2002, it was just a single top. Then we had a bit of a dip down, a slight rise. Same thing this last year, a dip down and a slight rise. And then down to the bottom, and you can see we bottomed out more or less at the same price, just below $2, where we bottomed out this time. But we then rallied up to around about $3, actually slightly higher in 2002. And then after that, dipped down to make a double bottom. And that's that little bit there in the corner on the sort of right-hand side of the chart. And the red line is where we are at today. So there is a possibility that we'll retest the $2 level. That's not out of the realms of possibility at all. And we saw a very, very similar chart, as I pointed out, as I have done here, in 2002. So we have to allow for a test back down to $2 and the previous low this year at around, I think it was 197, and possibly even a slightly lower low down to about 180 or 185 like we saw in 2002. So keep that in mind when you think of all of these scenarios playing out, because that would take us here from where we are today down back towards just below $2 and then potentially slightly lower down to $1.80. You'll know from previous videos that my support lines below $2 are at $1.80 and $1.50, and I've allowed all along for potential tests of those levels if we get down to or below $2 again. So that's $1.80 and $1.50. For now, however, let's see if we can hold this channel, the 50-period moving average, the 50% Fibonacci level, and just get a bounce off there. If we can, we should move up to the top of the channel, which would take us up to about $3, which is the top sort of flesh-colored area here. And then my overall target is somewhere actually where this 200-period moving average is. And if I just draw in a rectangle between $3.40 and $3.75, which as you'll know has been my target for an awful long time, I'll be able to show you why that's my target. It's also now where the 200-period moving average is just coming down towards the bottom of that area at about 350. So that 200-period moving average is always going to cause some resistance for the price. And you can see, go back and have a look at your charts over time, that the price of natural gas very often respects the 200-period moving average. But if I just scoot back in time, you can see why this area is so important. It was a major swing low on this occasion, going back to December 2021. It was a swing high, a double top, going back to February 2021. And if we go back to 2018, 2017, you can see repeatedly that this area is a very, very significant area of supply and demand. A couple of occasions there, a little double top there, single high there, actually a little spike up there's just zoom in, you can see just under the 50-period moving average, another attempt to get through there on that occasion in February 2019. And that line extends all the way back to where we are today. And if I zoom in and see what happened when we got there last time, you can see there was a period of consolidation around that $3.50 level and an eventual break. I know this because I was long at that time and I lost that particular trade. An eventual breakdown below there, a small gap up and a retest from the underside, and the retest actually failed. We filled that gap and then continued to move lower. So that level between $3, 40, 50, 60, and 75 remains a key target level. And it's now also where the 200 period moving average is on the day chart. So that's all on the day chart. Let's have a look at the 4-hour chart, and I'll tell you my strategy going forward. So on the 4-hour chart, it's a little bit more messy. There's a little green arrow there which shows you my current position, which is a 50% long position at $2.51. Now, $2.50, remember, is that 50% Fibonacci level, and it's shown on this chart by the top of this pink zone. And there's the rising channel line that we pointed out on the day chart, and that's down at about $2.50. So allow for a move down into that zone there, and depending on the price action on the 4-hour chart, I'll consider adding to my long position. I really want to get long on this, and I'm aiming for $3, and eventually towards the end of the year, $3.40, 50, 60, or 75. And any opportunities on dips I still consider to be good buying opportunities. If we get down to these levels and I add to my long position and then we start to fail and move lower, then there's every chance we could get down to $2.15. That's that next level I showed you on the day chart. It's also shown here on the 4-hour chart by this, again, a flesh colored level. And then failing $2.15, that's a really key level. Let's just switch back to the day chart to show you why. So there it is on the day chart. That's the 78.6% Fibonacci. It's the last chance Fibonacci level, and it's often the area where markets tend to reverse if they're going to reverse, and often the move is quite dramatic. So if we do get back down to that $2.15 level, previous very, very key support and resistance level, that will be the 78.6% Fibonacci, the last chance to actually add a decent sized position on before we move up, failing which we'll probably get back down to $2 and $1.97, and probably even if we get that low, we're going to have to visit $1.85 or $1.80. So that 215 level is also the last chance Fibonacci. Let's go back to the 4-hour chart, and there it is there. Not quite 215 on this chart, but close enough. 217, 218. So that's that last chance fib. And if that fails, we're going to have to go down to $2 and then potentially $1.85 to $1.80. And in the extreme case, maybe even $1.50. I don't think that's the most likely scenario though. I think we're going to try and find support at this trend line and this previous low at 240, 250. I'm probably not going to close my long positions, but I'll be then looking to hedge with short positions of equal size for a move down to 215 and then $2 and then $1.80. If that scenario plays out, which I don't think is the most likely or the most probable scenario. So I hope that's given you an overall picture. And if you get confused by all this mess, it's a very messy chart. If you have a look at the average true range and the average daily range indicators, you'll see that we're at pretty low volatility right now, moving sideways in a sort of a choppy mess. And the ADR indicator shows that we're not finding any real direction right now. So if you get into that sort of messy, choppy frame of mind, the best thing is to go to the daily chart and zoom out, take a bigger picture look. And if you look at this bigger picture, it's pretty clear really. We've got these support levels denoted by the Fibonacci levels, which also coincide actually with the price action support levels. And we've got this rising channel bottom providing support. We've got the 50-day moving average. We've just had the rollover into the September contract, so there was no excitement or any sort of sparks flying or anything weird going on. So the market's actually really pretty stable and steady as she goes. And I don't expect anything weird to happen. And if we can just maintain the sort of calmness and sideways movement, it looks to me like this whole area here is just forming a new ledge, a new sort of horizontal level of consolidation before the price moves up into the next level. We'd like to see it move up into this flesh zone here and hold in that level, hold in that consolidation zone, and potentially actually even just consolidate there for an equal period of time, which would be another month or two before we eventually get up through this channel top and start to attack this $3, 40, 50, 60, or 75 level. Hope you found that useful. If you've enjoyed the content in this video, please give it a thumbs up. And also if you want to see further videos on this sort of thing, and also currencies and metals and stocks and things like that, and consider subscribing to the channel. I'll see you in the next one.